Welcome back to Expediting Change. Your host, Shomari James. We are back here to talk about how we expedite change for financial futures for the positive progression of the culture. I have a wonderful guest with me here today, and I can't wait to get into it. My guy, what's good with you, man? How you?
I'm well, man. How are you?
I'm Gucci. I'm a little hungry, man. I'm on this damn diet, so I'm super hungry. So if I pass out, you got to take over the host duties, all
All
right?
right, I got you.
You
I
got
got
it.
you.
And I
Don't
know
worry
you
about
can
that.
do it
I
too.
know I
If anybody
could.
can, I know you
I
can.
could. I could.
Hey, why don't you
Well, I'll make sure I bring you a sandwich or something. Get some carbs, man.
And normally we sit down and eat too.
Yes. Yes, we do.
Why don't you introduce yourself now?
Yeah. So first and foremost, Shomari, thank you for having me on. Really excited for today's conversation. So I'm Ryan McCreadie. I'm the managing partner of LaFont Capital Partners. We're a quantitative hedge fund based here in Washington, D.C. And yeah, really excited to talk about, how we're expediting change. And yeah.
Love that, man. So I know you have some really good stuff going on. So I have the secret sauce to ask all these questions. But why don't you talk about the business first, define what it is and what you do, and then we'll get into the devil of the details.
Yeah, let's do that. So at LaFont Capital Partners, we're veteran owned, and I like to say we're a technology company
Mm-hmm.
that builds trading strategies and systems that manage money on behalf of institutional
Mm-hmm.
clients. So when you think about kind of what we do, right? In most financial markets, you have fundamental, right, where you're looking at and you're doing a lot of analysis, right? You're
Mm-hmm.
taking these companies, you're looking to say, okay, what's their price to earnings ratio? What's
Mm-hmm.
this, right? Is it a fundamental? Is it a growth? Is it a value?
Mm-hmm.
So you're trying to kind of determine, all right, based on your investment strategy, what you're
Mm-hmm.
doing. Well, what we do at Lafont is we actually build algorithmic trading strategies that are automatically executing systematically based on the criteria that we have, right? So
Right.
we're taking that human emotion, that human bias
Yeah.
out of our investing decisions,
Yep.
right? And really, we only care about price action. So I don't care if a Donald Trump tweet comes and moves the market 1,000
Yeah. Yeah.
points
Yeah. You
one
staying
way or the other,
consistent. Staying
right? We only
consistent.
care about price action.
I
So
love it.
right now, we have two strategies that we're actively running, and we're continuing to build strategies every day.
So my father died of lung cancer, right? So I don't believe in investing in anything that has anything to do with tobacco. So how do you personalize or do you personalize and what do you do as far as your investing platform is concerned?
Yeah, so we don't personalize, and,
Okay.
and let me explain what I mean by that.
Mm-hmm.
So you can really think of what we build as strategy almost as a product.
Yep.
So the equities that we choose inside of that strategy
Yeah.
are the strategies are going to be the equities that run.
Okay.
So it's almost very similar to like an ETF or a mutual fund, right? When you go and buy it, there's hundreds of different choices to choose from,
Yep.
but you can go pick a mutual fund, and some might be more, might not have tobacco-based companies, or might not have alcohol
For
companies.
sure.
Others might,
For sure.
right? So you as an individual get to pick and choose. Like, hey, okay, you know what? I don't want to put anything in that has to do with tobacco company,
For
or I'm going to
sure.
go over in this option.
Yep.
Very similar to us, right? We have different products, different strategies that will run,
Yep.
that'll have different equities that are in there
For
that have
sure.
different objectives. So,
Absolutely.
when the consumer can pick and decide, what strategies would work best for them in their portfolios. Again, our clients are institutions, so
Yep.
family offices.
Yep.
So, they care about really two things: preservation of wealth
Yeah.
and consistent returns. So
Preservation of wealth.
preservation of wealth and consistent return. They're aiming for a net after fees of about 15% per annum.
Mm-hmm.
And they want to keep their drawdown. So for those that don't know, a drawdown is a term that we use in the industry, and
Mm-hmm.
drawdown really means your losses. So
Yep.
when you look at an investing chart, right, you see the peaks and the troughs,
Mm-hmm.
right? You want to make those as smooth and as less volatile as possible,
Absolutely.
right? So they're carrying they want tight drawdowns,
Yeah.
steady
Yeah.
returns.
Yeah. So already spit a lot. We're gonna have to break it down and define some of it.
Yes.
We can start with ETFs and mutual funds. You already explained the drawdowns, and then also institutional investors. So let's start with ETFs, mutual funds, and then institutional investors.
All right. So an ETF, an electronic traded fund, and then we also have mutual funds, which they're very similar.
Mm-hmm.
There's slight differences, but from a conceptual standpoint and how they work,
For sure.
just think of them almost like a grouping of it's a pooled investment vehicle.
Yep.
Um, I mean, there's there's not much more to really explain. It's a pool.
No doubt.
It's
No
a
doubt.
vehicle,
No
right?
doubt.
So individuals can buy small pieces of it, right? They can buy small pieces of that. And then the other piece we were just talking, so it's mutual funds, ETFs, and
Institutional investors. So
institutional
talk about
investors, right?
your customer, your base, your client.
Yes. So, right, in the industry, there's two types of customers. There's retail
Yep.
and institutional.
Yep.
So when we say institutional, we're talking about family offices, endowments, pension funds. And we're talking about folks who their legal entities structures
Yep.
that their main activity is investing on behalf of either the families or the universities
Yep.
or the public service departments that they represent.
Absolutely.
And then you have the retail are guys like me, you, everybody who's out there and they want to day trade, or
Yep.
they're buying and picking their own stocks, right? And they're buying them through their broker, whether that's Interactive Brokers or Charles Schwab or whatever broker.
Charles Schwab, you owe me. Ryan said Charles Schwab on camera, so y'all owe me now.
I am a Charles Schwab guy. But yeah, so those are really the two differences. So, when you're a hedge fund,
Yep.
typically, we are the investments that we make and the strategies that we make are for sophisticated investors, typically people that are accredited investors or
For sure.
qualified
For sure.
investors.
Yep.
And there's a slight difference there just in the thresholds of net worth that you
Yep.
have to have between an
Yep.
accredited and a qualified.
Yep. Talk about it. Let's
Yeah.
define it for the people.
Yes. So if I'm not mistaken, accredited investor now, this threshold is 250,000 of annual income over the past 2 years, or $1 million in total assets.
Yep. Total assets.
And then if you're a qualified investor, it's 250,000, but it's more than $1 million in total net worth.
And now, why would I want to aspire as an investor for those two qualifications?
Great question. So, if you're, depending on what the investment is,
Yep.
you aren't going to be eligible to even invest in certain things unless you're an accredited investor.
Absolutely.
And this is due to the fact that the SEC and other regulatory agencies are out here trying to actually protect consumers from getting into investments that are just complex and they don't understand.
Absolutely.
Right. So, if we talk about this, right, if you're making $30,000 a year,
Yep.
and you put $20,000 of your income in there,
Yeah.
and the investment goes bad,
Right.
well,
You're gonna blame the system.
that's a severe consequence
Absolutely.
to your ability to
It's a big
live.
blow.
Yeah. Versus somebody who's making $400,000 a year and they have a $20,000 investment go bad, they can sustain that, right? It's not going to
Absolutely.
impact their quality of life to
Absolutely.
the same extent as it would impact that person who's only
Absolutely.
making 30,000. So there's different there's literally regulation and rules
Yep.
around who can invest in certain things and who can't,
Absolutely.
specifically in the name of protecting.
Absolutely. And what it does is, when you take a look at it, oftentimes you think about it, or individuals who don't necessarily know or understand think about it as like gatekeeping or roadblocking, and it has to do with systematic racism and oppression, but not necessarily in this case specifically. And in this one specifically, it is literally protecting you based off your potential knowledge of investing in the market going into a deal. And oftentimes the reverse side of that is individuals, they will only ask for accredited investors because they know in their business model, if they are looking to have investors come into the business, into the fold, and be giving opinions, they want individuals to know that you've done some very big, high investment, or was in some very big, high investment vehicles, and you have the value from a monetary fiscal standpoint to give them advice. Because if it is that 10, 15,000, and I'm looking at a $20 million deal, one of my friends one day said, I don't want a whole lot of people in my pocket when I'm looking for this investment, especially those of which who don't know what they talk about. You know what I mean? So it's not necessarily a bad thing. Now, it's also something to strive to, because the more you grow your portfolio, your knowledge and your earnings, the higher you get to, or you start achieving and unlocking and getting to that accredited and qualified investor. So just wanted to put that out there, because oftentimes individuals say, oh, the rules, and it's not necessarily just about the rules to keep individuals out. It's the rules also to keep people safe.
You said something that triggers something for me.
We kicking it,
This
bro.
is why I hate social media traders.
Okay.
I see it all the time on my feeds.
Yeah.
You know, the guys that are day trading and showing
Yeah.
how much they're making. I'm like,
Yeah.
it's such BS.
Yeah, you can say bullshit.
Yeah, it's such bullshit. Okay, good. Let's say it. All right. It's such
Yeah.
bullshit.
Yeah.
And what it does is it sets this unrealistic expectation for
Absolutely.
folks that, okay, I'm going to put $20,000 down. I'm going to double
Absolutely.
that tomorrow.
Absolutely. Not a chance.
Not a chance, right? It goes against the actual fundamentals that you have to learn. It's like playing sports,
Yeah.
right? If you've never played football
Yeah.
and you don't understand basic tackling,
Blocking and tackling.
right? Do you expect to go out there and, you know, record 5 sacks?
Right.
Like,
Not a chance.
you might get lucky,
Absolutely.
right? But you're not going to do that consistently.
For sure.
And so, you know, investing's the same way,
Yep.
right? You can't just throw money in the market and expect to grow your money.
Absolutely.
Right? I mean, you might get lucky.
Yeah.
Right? You know, you might, you know, somebody might say, hey, you know, buy NVIDIA, and you go throw $100 in NVIDIA and it goes up, right?
Absolutely.
But, you know, you don't understand why you did what
Absolutely.
you did. And
Love
so for me, that is really the big thing is, you know, the education, which is why I love what you guys do
Appreciate it.
here, specifically at the charter school, and, you know, what your whole business is about is you're teaching those fundamentals.
Absolutely.
Right? You're
Absolutely.
teaching the blocking and tackling
Absolutely.
so that the folks have the skills
To
and the
actually do it.
tools to go actually do it and become accredited investors, to
Absolutely.
become qualified investors.
Absolutely.
And so, I mean, this is why when you're like, hey, do you want to speak on this? Absolutely.
Let's get it.
Absolutely.
Shomari, why you take so long to ask me? Let's go.
Man, because I get excited talking about
sure.
this stuff. You
For
know,
sure.
I get excited about the education because I think about where I came from.
Yeah.
I mean, I was a kid who grew up on food stamps.
No doubt.
You know, I didn't come from, you know, tons of money and
For
have parents who invested and taught me how to
For
invest.
sure.
You know, I learned from mentors and learning, you know, making mistakes,
Yep.
you know, being stupid, throwing money in there because I thought it was
No
gonna,
doubt.
you know,
doubt.
without any, you know, reason for
sure.
believing that it was gonna go up. I was like, oh, it's gonna go up.
Throwing it
money
at
in.
it.
Yeah.
Mm-hmm.
But being lazy, not doing the research.
Absolutely. And I think there's another side to it too, fam. So when individuals who don't understand what you just explained also see that, that's when the conversation around investing in the market is gambling comes in. So now you and I are having these debates with individuals about, well, you might as well go to the casino. And then now I'm at a place where I don't even debate anymore, but those type of social media investors, that's what it does. Well, I took 20,000, I threw it down on whatever, and I made a 20% return in one day. It's hard to argue against someone except for the fact that I can tell you why this specific individual did that and I know what happened. But when they're conceptualizing it as gambling, that is what that guy just did. And that's not investing.
Right.
That's not what I do. That's what he does, and what he does is gambling. But the stock market is not gambling overall. Talk to me about your thoughts on that.
Oh, I think you're spot on. I tell people this all the time. And you see this a lot right now, especially in crypto.
Oh man, crypto.
So, you know, I've been involved in crypto since 2015. And today you're seeing, because it's much more mainstream now.
For sure.
And there's all kinds of meme coins and meme tokens. And so when I'm talking to people today, you know, just friends and family and other folks that are asking me questions, you know, I only invest in projects, crypto projects that are actually backed by solid infrastructure. I only invest in companies that are building infrastructure for the blockchain. So Ethereum,
for sure,
Bitcoin,
for sure,
Solana,
for sure.
Right. I only invest in those because you look at the different projects that are being built on top of those platforms. And there's actual real usability. There's actual real business value, use case, right? You know, I know when quick side story, when the president launched his truck coin, you know, I know somebody that was gonna buy it, and they were like, hey, should I buy this? And I was like, if you're gonna buy that, you might as well just give your money to me.
I heard that. Let me hold it.
Right, like here, just, you want to put $5,000 down here, just transfer it to me. I'll take care of it.
For sure.
Like
For sure.
Like you're literally just gambling.
Yeah.
Like, it's a meme coin. There's
Absolutely.
nothing backing it. It's just that this guy decided that he wanted to create a coin,
Absolutely.
put it out there, and sell it.
Absolutely.
And there's hundreds of those meme
Mhm.
coins.
Mhm.
So if you don't understand, what you're buying and why you're buying it,
Mhm.
then you're just gambling.
Mhm.
And so I completely agree with what you're
Mhm.
saying, right?
Mhm.
Like, it's you see it again, and a lot of it goes back to social media. A lot of it
sure.
goes back to, your Uncle Joe, the mechanic, who's also,
Yeah.
giving you all
For sure.
the stock advice, right?
Absolutely.
So you gotta learn the fundamentals
I agree.
so that you can make the educated decisions yourself.
I want you to underscore that point, because that was a really, really, really good point about the cryptocurrency. I want you to speak to the people. Look in that camera
Okay.
and say it again, even though you already said it. You invest in crypto because and when what?
So I invest in crypto only on tokens that have real world use case, business value. So they're back. So I only invest in companies that are building infrastructure layer applications. So if you think about like Ethereum, Bitcoin, Solana, there's others out there, right? There's a couple that are doing real world things. So for one of the reasons why a lot of people still, in my opinion, aren't really using crypto, is because it's really difficult.
For sure.
I mean, even as a sophisticated individual, moving money and having to swap my coins because, this network doesn't talk to that
For
network.
sure.
It's not easy. It's not
sure.
user friendly.
For sure.
But there's companies out there that are making it as easy as transferring money from Charles Schwab to Wells Fargo.
Yep.
Right? You just put in your account number
Gone.
and they're
Done.
working on it. Right.
Yep.
And then all the stuff on the back end and the swaps and the gas fees, like all that's being worked on the back end. So like those are the types of companies I'm working on because those are what's going to allow real world businesses to move their infrastructure from, a cloud environment where they are today
For sure.
to a blockchain environment.
Absolutely.
And there's something else you got to keep in mind. Legacy businesses, it's a big risk for them to migrate to the blockchain because they got to migrate to the blockchain.
Absolutely.
Right? They don't just magically start using it.
Absolutely.
So they got to move all that data over. And so you're going to need to be able to ease and facilitate that. And there's companies that are working on that, that are working on the actual migration piece of it. So
which is a big deal and difficult
it's
and time consuming.
It's a huge deal. But if they can get it right,
Yep.
and they can get the wallet piece right to where it's easy to move money,
Yep.
I think you'll really see that. And you're seeing it today. You're seeing a lot of big banks going, heavier into the crypto space.
Absolutely.
Specifically around Ethereum and Bitcoin and other use cases. So, for me, again, that's my criteria when I'm looking at crypto.
Yeah.
Everything else is just noise to me.
Absolutely. I couldn't agree more, man. Like crypto as a currency for exchange backed by the blockchain. Because blockchain is years old technology, right? Like we were using when I was at UPS in early 2000s, we were using blockchain for predictive analytics, right? So the blockchain as a technology has been around for a minute. So if that coin and that use case is not around solid blockchain technology, then a meme is something that I'm looking at on Instagram, not a coin that I'm buying.
Right.
You feel me? It's not going down. It's not going down. Now, what would you tell?
And so when
No,
I
go
say
ahead,
the
go ahead.
infrastructure level, just to be clear for folks, when I say the infrastructure level, I'm talking about building the actual infrastructure. Think about it like the internet. When people were building the infrastructure that we now know today for our internet, these are the types of investments I'm making because blockchain is just a better form of internet.
Absolutely.
Right. And so so that's what I say when I say I'm investing in infrastructure level. That's really what I mean. Companies that are building it and making the blockchain possible for everyone.
Absolutely. Which is with building. Great segue because you started to answer the question that I was about to ask, which is dope. So now in this building, in this financial education, this investment piece, how has AI changed the game, bro?
Oh man,
you see how happy my guy got?
So here's my unsolicited advice. If you're not using AI, you need to learn how to use AI.
For sure.
It is a game changer.
Absolutely.
Especially when it comes to analysis.
Absolutely.
you know, artificial intelligence today has reached a point, and it's mind-boggling. And Drew and I were actually talking about this earlier. It's mind-boggling to me how fast it's advanced.
That's right.
As you know, in a previous life, I was working on defense contracts,
go.
dealing with next generation type of capabilities, where we were heavily focused in artificial intelligence for defense capabilities. And so, having been around AI since really heavily since 2019, to see how far it's gone from then to now
Crazy.
it's insane.
Yep.
So, you could absolutely be using artificial intelligence today. You can build an AI chatbot for yourself, ChatGPT. It's super easy to do. That can go and analyze, read articles,
Yep.
create summaries,
Yep.
analyze PEs,
Yep.
analyze corporate, your 10K filings, your 10Q filings. For
Yep.
those that don't know what that is, every corporation has to file. So every public corporation has to file a 10Q, which they do every quarter, and then 10K is their annual report. So you could actually use AI for analyzing
Absolutely.
whether or not, with a pretty good predictability score,
Yep.
of whether or not that equity is going to go up and down. It's actually something we've built and we're using today.
Fire.
Yeah, we
Right.
have that today, where we can look at an equity. We can look at an equity and say, okay, with a 75% probability, this is going to go up or down. And it's using artificial intelligence, but that artificial intelligence is going and it's analyzing 10Ks, 10Qs. It's looking for differences
Absolutely.
over the previous year's filing.
Fire.
So, I mean, and you're seeing it. There's a lot of, especially on the institutional side, there's a lot of folks, brokers are doing it, back in fund support managers are doing it. I mean, it's in every aspect of the industry.
Fire. That was absolutely great. Listen, so how do I, as a retail investor, have the trust to go from that AI bot, that chat bot, and what it's telling me, to then getting into clicking and making my first purchase? Because that's what gets scary. Because sometimes AI is cold, but every once in a while, cause I call my AI Chatty. She and we go back and forth. I'm like, Chatty, that's not right. Go back. No, go back. And they're like, oh, Shomari, I see that I missed something. Let me go back and look at it. So for I'm not gonna say rookie, but for a retail investor, how do I make that leap? I've done all the research on Apple. I've taken a look. I've searched it. My Chatty's giving me some information. My AI is stone cold. Now I want to click purchase. But before I click purchase, now what is your advice? Because we're not giving advice. What are your thoughts on that?
My thoughts are nothing substitutes experience. So why do I say that? Because you still have to learn the basics.
For sure.
Because AI can spit out whatever it wants, but if you don't understand the basics, you don't know if it's right or wrong.
For sure.
So for me, that's what I say. Before you worry about incorporating AI into your investment decisions, learn the basics.
For sure.
Right? They don't try to do a spin move before,
sure.
And
get dizzy and fall out.
Right.
No doubt.
So that's my real response is,
no doubt.
Don't try to substitute, don't try to take a shortcut by using AI, because you don't even know if it's wrong.
Learn it.
Right. To your point, when Chatty comes back with some bullshit, you're like, wait, that's wrong.
Like, hold up.
Because you have the experience
For sure.
to know, like, that doesn't sound right.
Love that answer.
Right?
Love that.
But if you didn't have that experience, like, you wouldn't know.
Yep. So how do I gain that experience? By research, by talking to people, by getting somebody in my corner?
Oh, man, yes. Yes to all of those.
All right.
Right? Find people that are already in the industry doing it.
Yeah.
Right? Because your associations matter.
Yeah.
And so find people that are already doing it in the industry.
Yeah.
Definitely do all kinds of, there's so much information out there. Brokers, like Interactive Brokers, for example, has a whole trading academy. Free. Where you can go and you can learn the basics. Right? You can learn how to analyze, PEs. You can corporate filing. They have it's robust, right? And I think Trading Station has something like that. There's all kinds of courses. I know here at Legends, you guys
absolutely. We got Core Equity Now and Legends. Pull up on us, equitynowinc.org. We got some stuff we can teach you. But So why do you think people shy away from the market, bro? Because it is so much information nowadays. AI is out there. You can get that blocking and tackling. Even I'm gonna shout out Charles Schwab, who bought TD Ameritrade, because Schwab didn't invent this. TD did. Their information that they built on that Ameritrade that Charles Schwab took over, you can learn anything and everything right there before you click anything. But why do you think people are just hesitant, bro?
I don't know if it's hesitant or if it feels overwhelming,
Good point.
right? So is it a
It's a lot.
situation? Yeah, right. It's a lot if you don't have a starting point. So, there's the saying, right? How do you eat an elephant?
For sure. One bite at a time.
Right. So again, I think and I keep going back to this because
Yeah.
I truly believe this is
For
a
sure.
real thing.
For sure.
I keep going back to this social media aspect where it's like, oh, I'm putting money in, I'm there tomorrow.
Yeah.
So there's this almost kind of unrealistic need
Yeah.
or unrealistic result that
For
people are
sure.
trying to obtain.
Makes sense.
So it's overwhelming.
Yeah.
Right. So for me, in my journey specifically, I can speak to my journey
For
is
sure.
that, I learned a lot by just reading, researching, being around people, learning a little bit by little bit.
Yeah.
And that's what was able to get me to a point to by the time I actually started working in the,
For sure.
in the industry, I was able to at least have some basic knowledge. And then obviously that grew as I
Absolutely.
continued into my career.
Absolutely.
But I think that's it. I think it's just learning one little piece at a time and understanding it's not a race.
Now,
Building wealth is a journey. It's not a race.
and that is the one thing that we talk about all the time is tortoise and the hare, bro. Right? Like, it is not a sprint. It's a 100% pure marathon. And individuals who are expecting that overnight success, you're gonna feel like you failed because it's not gonna happen overnight. It's just not gonna happen. But I know you're a humble dude, and I didn't specifically ask about it, and I want to ask about it so you can talk about it. I know you wrote a book too.
I did.
So let's chop it up about your book, bro.
Yeah. So I wrote a book called The Balance Sheet of Your Life, which is kind of a play on words.
For sure.
For because all of our lives are just a sum of micro decisions, right? Every decision you make is either pushing you towards what I call your ultimate self,
For sure.
or it's pushing you away
Love
your
it.
ultimate self, right? So every decision you make is either an asset
Yeah.
pushing you towards it or a liability taking you away.
Love it.
And it's just like a balance sheet, right? The more assets you accumulate,
Absolutely.
you're more wealthy,
Absolutely.
right? The more liabilities you have, you're bankrupt.
Absolutely.
And so, there's been a couple folks in my life and a couple books that I've read that completely changed the game for me.
For sure.
One of those books was Rich Dad, Poor Dad by
Me-
Robert Kiyosaki.
Me too.
Right. So, I mean, I think for anybody who's interested in investing, like that's like a required read.
Absolutely.
Like that's a required
Absolutely.
reading.
Absolutely.
Because that book, the main concept of that book, which is assets and liabilities, is that, he defines assets, anything that puts money in your pocket.
That's right.
And the liabilities, anything that takes money out of your pocket.
For sure.
There's still I have this argument with people to this day still that will try to tell me their house is an asset. And I'm saying, wait, is it your primary residence or are you renting
investment
it out?
property? That's right.
Oh, it's our primary. I'm like, it's not an asset. It's a liability.
Absolutely.
Like, don't pay your mortgage.
And see what happens.
Don't pay your property taxes. See who owns your house.
Absolutely. No
If you're
doubt.
renting it out and it's producing cash flow for you,
Absolutely.
then it's an asset,
Love it.
right? It's putting money in your pocket.
For sure.
But the moment it's taking money out, it's a liability.
Absolutely.
And so that concept, and then there was a good mentor of mine, gentleman named Rashad Howard, who had this thing called the key to everything. And this is really where I was able to kind of put the framework together. In the key to everything, it says that your inputs drive your thoughts form your beliefs, your beliefs drive your actions, your actions drive your habits, your habits drive your results.
Nice.
So if you want to change anything in your life,
For sure.
you have to start by changing your inputs.
For sure.
And you got 4 input areas. You have the media, it's what you read, watch, listen to. You have your associations, right? The people you hang out with, right? Our moms always say, show me your 5 friends, I'll show you your future. You have your life experiences. What are you experiencing on a daily basis? And then most importantly, in my opinion, you have your self-talk. What do you tell yourself?
Absolutely.
So, when I think about that, like, my input areas to get to where I wanted to be even today,
Yeah.
you have to start by creating where you want to go. Right?
Absolutely, brother.
You
He's
can
spitting, man.
you can step into that persona.
That's right.
Right? You see it all the time with actors.
Mm-hmm.
Actually, I had an epiphany probably about 10 years ago.
Mm-hmm.
Remember when Heath Ledger was the Joker?
Yeah.
And
Probably the best Joker ever. Hands down.
far.
Hands down.
So he became so ingrained in his character that he
Mhm.
actually ended up, going crazy.
Yeah.
And suicide. I mean, friends who talk about him after that movie before he
Yeah.
killed himself were like,
Yeah.
he was not the same guy.
Yeah,
Like
for
he was
sure.
weird
For sure.
after playing that
For
character.
sure.
And so, you see actors, they change who they're going to be.
Absolutely.
And so we can take that same concept, right? And then we can back into it by, okay, if I want to be, the CEO of a charter school in
Yeah.
equity now, and this, okay, what inputs would that person have?
That's right.
What associations would they have?
That's
What
right.
self-talk would they have?
That's right.
Right? And then you can begin to build and make decisions. So
Absolutely.
the balance sheet of your life is really just a decision-making framework.
Love it.
It's a repeatable decision-making framework so that
Sure.
every day, because when we wake up every day, Shomari,
Mm-hmm.
we have social,
Mm-hmm.
emotional, and financial capital. And they're all finite,
Absolutely.
right? There's only 24 hours in a day. I
Absolutely.
only have so much social bandwidth. I only
Yep.
have so much emotional bandwidth, and I only have so many dollars I can spend.
Absolutely.
So every day, I have to make decisions around where I'm spending that capital.
Absolutely. Love it.
Right? Am I spending that capital doing something
Mm-hmm.
that's pushing me towards where I want to go? Is it an asset to me,
Mm-hmm.
or is it pushing me away?
Absolutely.
We could talk about, we talked about your diet right now, right?
Yeah. Struggling.
Right? But you're looking at the overall goal, the
For sure.
health, and you're saying, whether you're consciously or unconsciously doing it at the
Yeah,
moment,
yeah.
you're saying, all right, am I going to eat this cheeseburger?
Right. I would love to right now, but I can't.
You're like, that's a liability.
Absolutely.
That's not pushing me where I want to go. That's taking away
Absolutely.
from where I want to go.
Absolutely.
Right? So the moment we realize that, our life is just a series of micro decisions that lead up to an event, it makes it very easy to quickly go, okay, is this an asset or liability?
For sure.
And the more assets I accumulate, the better friends I accumulate,
That's right.
better life experiences, the
That's
better
right.
self-talk I have,
That's right.
the better media I consume,
That's right.
right? Education, podcasts, things of that nature. Guess what? I'm building all these assets that are going to help me achieve where I want to go.
I love it. Everything you said, I love. The absolute only thing that I would add to it, and I say add, not take away, add to it, is the universe will also attract it. So once you shift that mindset and you start doing those things, the universe is going to begin to push people, places, and things into your purview, into your area, into your space that are not necessarily friends, but to help you get to where you want and where you've decided you want to go. 100%.
Absolutely. 100%. I've seen it many times over, right?
It's crazy.
Others, myself,
Mhm.
and so, yeah. And a lot of that is because you're putting yourself in the right position,
Absolutely.
right? So the
Absolutely.
universe is there, but you're only there because you've made the right decisions to be there.
Bang, bang. God only helps those who help themselves. You feel me? Now listen, I know even a lot more. We could talk for probably 2 more hours.
Yeah.
However, tell me, and you touched on it a little bit. So as you answer this question, I also want you to weave it in, because I know your background, I know your story. When you said I didn't grow up this way, I was on food stamps. What are you doing to expedite change?
I love this question. So business is my vessel. Business is the platform that I'm creating for others who, were like me, not like me, but to create a platform to where they can build wealth for themselves, their families, and their communities.
Love it.
Right? That's what I care about.
For sure.
That's the driver behind the foreign capital.
For sure.
The driver behind the foreign capital is to be an economic engine. An economic engine that allows me to pour back in to, again, to my family.
Yep.
In my community.
Absolutely.
You can't feed anybody from an empty plate.
Absolutely, bro.
And so, but when you have that understanding of why and what your purpose is, building business is hard, as you know.
Oh yeah.
It's not going right back to it, right? It's, it's an investment. Like
For
you're
sure.
investing every day. And
For
it's,
sure.
Myron Golden, who's one of my, my favorites, says, it only took me 14 years to become an overnight success.
Man, listen, I'm at about 30 right now.
And so, for me, that's what I'm doing to expedite change.
For
Right?
sure.
I think it's, creating a platform
For
and,
sure.
trying to spread the frameworks and the things that I've learned
Yep.
throughout my life. That's the whole reason I wrote the book,
Yeah.
because it's my story
Yep.
with all the lessons learned and the stuff I went through.
Absolutely.
And then I figured out, like, oh, wait, there's a repeatable system
For sure.
that you don't have to go make all the same mistakes I made.
If I told you the pothole, don't jump into it and don't hit it.
Exactly.
I already
right?
let you know.
Like, hey, here's the ways, right? Here's the ways. There's a traffic jam over there. Don't go there. Go this way. Right? And that was the whole purpose of the book.
For sure.
Was to create a repeatable framework that gave people the ability to understand at any station in life.
Yeah.
Oh, I know exactly what I need to do if I want to change
Absolutely.
my outcomes.
Absolutely.
Right. And so, yeah, man, that's how I'm expediting change.
I love it. I absolutely love it, man. I appreciate you for joining the show, man. This has been a great conversation. Ryan murdered it. He gave you a lot to think about, man. Like a whole lot to think about. I think I'm gonna have to even go back, rewind it, and then look up some of the things that he said. But if there was just a couple things that I would leave you with to summarize the way I do it, the way I input it into me, similar to what Ryan was saying, is beliefs drive behaviors and behaviors drive results. Ryan, he expounded and expanded on that, which was really dope. Go back and write down what he said. But what you believe in is going to drive the behavior that you enact and that you do. And then the result of that, from those beliefs driving behaviors, that behavior is going to drive the result of what you want in life. And you can apply that in anything. So in having the practical application, let's talk about it. He was very pointed in saying on a multitude of occasions, blocking and tackling. Nothing that you do should be in a space where you just throwing money at it just to see what sticks. That's not what investing in your future, in your life, in your family, or the stock market means. That is absolutely not what that means. Do your research. One of my loved Roger, I can't say his name right now. Roger Struther, my mentor, regardless of how much money he made in any stock, every time he called me and we had a conversation, he said, do not buy this stock based off what I'm saying to you and based off my success. What I eat don't make you poop. Do your own research. So then, as Ryan said, you can gain your own experience. It's up to you to get off the couch. There's a ton of different modalities. There's a ton of different ways. But once you start investing in the market, start investing in yourself, and you understand that this is a marathon, not a sprint, you too will be expediting change. I appreciate y'all for pulling out for me.